welcome to Finextra. I'm Emily Horler and I'm here with Silvan Schumacher of Swanest, and we're at Cybos 2016 in Geneva. Thank you for joining me.
Thank you for having me.
How do you explain the rising popularity of robo-advice?
Well, different factors contribute to that popularity. I think, first of all, we now see that some of the early startups in the US start become important. They have now gathered a substantial amount of assets under management. I think Betterment now with 5 billion of assets under management, giving a clear case that this is a market that should not be neglected. There were incumbents, big companies like Vanguard, Schwab and Schroders with an investment in Nutmeg that entered the game as well, making a case for traditional companies to enter that market as well. And lastly, I think there's also a hype generated by startups and by financial service providers themselves. A hype around new technology in online investment space, which is, in my point of view, the most dangerous one. Because we see a couple of companies becoming more successful in that space, especially in the US, but these are a handful of companies, and one part of these companies have a huge brand behind, the other part of the companies have huge funding behind, but the rest of the robo-advice are not yet successful.
What value is robo bringing and how far into the advisory space can robo go?
The big advantage robo-advisor brings to the market is simply a quality investment advice to the mass. If you go to a bank branch and ask them for investment advice, they come up with a little paper, here high risk fund, medium risk fund, low risk fund, please make your choice, we'll invest your money for you. It's not personal, it's not independent, it's just in-house funds. If you discover the fees somewhere in the fine print, you will discover that they are actually not that low. So robo-advice is just a good way to invest. It's not something radically new, it's just transparent, it's simple, you can do it from back home, it's independent, and that's enough to make a case in the investment world.
What are the key technology strengths of robo and how does technology enable differentiation in this space?
Technology itself brings certain advantages. First, it's accessibility. Everyone has a computer back home and everyone with a computer can access these services. Technology brings efficiency. There is a lot of inefficiencies in the back-end services nowadays. Technology can help to make that efficient and keep costs low. And last but not least, technology can help to make businesses scalable and eventually make businesses to become very profitable. Now, what or how can these technologies help to shape a value proposition that differs from each other? Currently, robo-advisors have a few differentiators, which are not that great. I think they should need to be challenged. But what you have is you can compete on cost. You can be the one with the lowest fees. Very dangerous because there will always be one that's going to be cheaper than you. You can compete on the algorithmic side. You could say you have the best algorithm, you have the best engine behind. Again, very, very tricky because who's going to believe you if you're a new startup out there telling the world that I have the best algorithm? And last but not least, on the experience side, where you can make the case, well, I have the best experience to make people interact with investments.
Silvan, thank you very much.
Pleasure. Thank you very much.
Thank you for watching.